Sorry about that. I wasn't live on. There we go. I'm live now on the air. So let's go back to the beginning. A little bit of a technical difficulty. Just wanted to kind of show you what the market direction is on Bitcoin. So here we go. The question is the Bitcoin making a comeback? The market is in a confirmed uptrend. That is definitely for sure. The question is, why is it going up and why is it going sideways? Well, right now it is sort of going sideways into the election, and but it is up slightly. The Nasdaq has made 11,509.46, and that's pretty good. The S&P is 500 is up. The Dow Jones is up, and but we do have less volume on it as everybody is trying to figure out kind of what the general direction of the market is going to be. So, very interesting time to be in the market. I just want to kind of show you the chart on the Spider. This is the world's largest ETF, and it has just literally, many thousands and actually millions of people have their entire retirement in this. It's up, and that is key because, as you can see in this chart, this is the cup with handle. It has pulled right up to the 21-day exponential moving average. That's this green line here, not the cup and handle line, but the other one. That's the 21-day exponential. So a lot of the programmatic traders trade off of this line. So this is interesting, but the volume is down on this. The key level on the Spider is about 320. We're at 344 right now. So that's good. We seem to be trending up. At least weekly, we are trending up in somewhat of a weak motion on the S&P. So let's take a look at the QQQ. This is where many of the very best of all of the of all of the trusts of all of the this is one of the best ETFs because it covers only the 100 largest in the Nasdaq, and this is where Microsoft is, Amazon, those kind of things. It's up. There's a key level on this at 275, and it looks as if we are bounced right off of the 50-day moving average on relatively low volume. So again, it hasn't really it made its high here back back about on the 4th of on the 4th of October, but it has been kind of doing this cup action. Now, this is a very interesting chart pattern because this does indicate that there's a likelihood that we will see, if it moves above this buy point here at about a little bit under 300, about 295. If it moves above this convincingly, then we're going to push higher. But right now it's sort of moving sideways in the market. So that's kind of that's kind of how it is. It's moving. So that gives you kind of an idea on that. Now, I want to get into the featured thing today, and that is the Grayscale Bitcoin Trust. And what in the heck is the Grayscale Bitcoin Trust? Well, the Grayscale Bitcoin Trust is the largest holder of Bitcoin in the world, and they have about 4% of the world's supply of Bitcoin. And currently, as you know, Bitcoin has seen some renewed interest. And part of the reason is that before it was very hard to trade Bitcoin, and there weren't as large and reliable intermediaries. Well, yesterday, PayPal announced that indeed they had decided to integrate that into their payment system. And this is really significant because PayPal is probably the largest online payment system in the world. Now, it's true, there are other things out there, but this is really, really significant when it comes to Bitcoin. So I do expect at least we're going to see some strengthening in the Bitcoin. As you can see on the volume here, I'm going to try to show you that it's moved up a little bit above the normal average. So we have a relative strength of 93. So this is quite excellent. So there is a way for the average person to move in and out of the Bitcoin market. So I basically just kind of want to put this up there. This has appeared in the Investor Business Daily today, and basically what happened is that it's shown a third straight gain on Wednesday, and it went basically up 7.4% to 1429, and actually that's the highest close since last August. So the volume has tripled, and so we may be into a situation, we may see a little bit of a pullback, but we may be into a situation very, very soon when there is going to be more interest in Bitcoin. So what I'm trying to show you is a way that you might be able to be involved with this. I just want to kind of show you, for everyone out there that's watching on TikTok or on YouTube, my current holdings. This is the current holdings, and I will show you this right now. I am currently in Taiwan Semi, Tesla, Cloudflare. I'm in Qualcomm, Viva Systems, PayPal, and GBTC. This is the one I'm talking about. I just started with a very small position in this, but I'm kind of wading into this because I do think we're going to see some very nice action on this shortly. Again, it's not a recommendation to buy or anything, but there is a definite movement into Bitcoin, and this is an easy way to own it. So just wanted to kind of show you. Basically, I'm broadcasting currently on TikTok, YouTube, and Periscope. This is my phone number here in Dallas, and the email in case you are interested in asking any questions. And I try to do this all for free, so that you can see kind of how I'm trading, and it might help in your trading as well. So, without further ado, let's go to the questions. Thank you for holding on and through the technical. It always seems like I'm having technical difficulties, but I'm getting better. Okay, so Jim, do you think that Tesla will rally again to a new highs because it's going to be touted on the S&P inclusion? Well, you know, this happened last time with Tesla. We had a situation with Tesla where they thought that it was going to go into the S&P last time. It didn't happen. But again, Tesla is showing good numbers. It's pulled back a little bit, so let's look at the chart on Tesla, just kind of see where we're at. And I think this is a very key stock. So, there is potential. I also, on my watch list, Ford has appeared on my watch list, so we might be looking at that as well. So here we are with the chart on Tesla. As you can see, this is the daily chart. Just wanted to show you that the buy point is 502.49. It is pulled back to 428.50. It seems to be kind of in this trading range right on the 21-day exponential average. It still has a relative strength of 99. It doesn't get any better than that, folks. And of course, the earnings came in just tremendous. They were up over 106%. Now that is, with the kind of numbers that Tesla's pulling down, that is incredible. And I do think going into the end of the year, I think as the Tesla production ramps up, I think you're going to see some strength in the stock. It's sort of been hanging out really from about 420 on up to about 435. That seems to be the range that it's trading in right now. I do expect, though, by the end of the year to see it higher. Now let's kind of look at the trending on that, and I think we can safely bet that it's gonna trend kind of like in this sort of trend. So let's see if I could put a, oops, there we go. Let's see if I can put a trend line on. Well, I can't seem to put a trend line on there, but as you can see, it's moving right along the 21-day exponential. So let's kind of look at the at kind of where it's at. It passes 8 out of 9 for the O'Neill chart. Let's look at Warren Buffett, what Buffett thinks about this. He's not quite as excited as William O'Neill. Now, tell me, why do I look at these screens between Warren Buffett and William O'Neill? Well, Warren Buffett is a great trader, but he is what they call a fundamental trader, and he typically looks at the company sort of where it is today and what the breakup value is on it. William O'Neill is a little bit different on that. He is a technical trader, and I tend to be in that realm too. He's looking at it. He's looking at stocks so that in such a way that they will move on technical basis. And right now, the technical numbers for Tesla look extremely good. So I wouldn't be out of it right now, even though we are right before the election, and it will definitely. I think the election will affect some things with Tesla. So hopefully, we will get it working. And it will run that way. So let's take a look at the next question, and let's see from anybody from TikTok thoughts on space, SPCE. Let's pull up space. on that SPCE. And by the way, I am trying to simulcast the charts on TikTok as well. So hopefully this is kind of a new experiment for me. Hopefully this is working, and you can see it kind of as it goes. Now this is the chart for space, and it has pulled back to the 21-day line. The relative strength is down significantly, and we're going into earnings. So based on this chart, it does have a cup pattern. Based on this chart, I am not very bullish on this right now. When I last traded this was before the first quarter earnings came out. What we did is we bought the stock, and then into earnings we held it, and then right before it announced, that's when we sold it. Now, if you're holding this, I think you have to be a little bit careful. It's only got 4 out of 9 on the technicals, so it is not really a buyable stock right now, unfortunately. I was hoping that it would be. We do have increasing fund ownership, though. So here's the thing I would say about space. It's not probably the right time to buy it, but there is a buy point on it, and that buy point on it, it potentially is a gap. That buy point on it is a 22.54. It's right now at 22.84. So it's pulled way back down below the 21-day exponential moving average. So this might rebound. I mean, we could see possibly a rebound on this going into earnings, but you have to be very careful when you're trading this. If you do go into this stock, it looks like it has bounced at the 21-day. That can be a very good place to buy the stock. The only thing is, I would not hold this through earnings. Absolutely never hold this through earnings. It's just too speculative. So it looks as if, based on the chart pattern, if you want to make a little bit of money into earnings, which is basically in 14 days, you could possibly buy a small position of this. I'd say about maybe a half position, and then hold it into earnings, but sell it the day before. That's very, very important on this one. Sell it the day before, because I think that it's possibly gonna pull back even if it does move up. So that's kind of the take on that. So let's take a next question on YouTube. So here we go on YouTube. What about Beam? Let's take a look at Beam. Let's take a look at the chart on Beam, BEAM. And that is Beam Therapeutics. Okay, well, I am not that familiar with Beam Therapeutics, but let's take a look at the chart here. We have pulled very nicely above. We were in a buy zone, but then we just gapped up. For something is going on with us. We've got an Easter egg down here, and that is the most volume since the last pivot. And the last pivot on this was basically just 6 days ago. And it's basically up 13%. So something must be going on with this stock. Let's see if we could find something in the ownership. Well, 6 out of 9, that works. Let's see if there's more funds. Yes, there are more funds going in here. So there's some story that's going on here. Let's take a look at that. It's 74 on 179 ranks. That's the sectors. And so this is kind of how it comes out. Industry groups, just trying to get an idea of this. We're up 1.7% today, or 12% year to date. So that's very interesting. This is a tough stock to buy. Really, the proper buy point on this probably is this first stage pivot at $31. So can you buy this? Well, it's up $5 today. I don't think you want to buy it at this high level. I think it's going to pull back. If it pulls back to the base, you could buy this, but you might. This might break out. So this is a very interesting one. Beam Therapeutics. I'm going to put this down on the watch list and see if we can find out more information on Beam Therapeutics. So I thank you very much for that suggestion there. Interesting stock. Okay, so let's see. And SBIO. Do you think biotech is going to boom in the next rally? Here's the thing about biotech: it's a tough area to predict, because it has some issues regarding profitability. Basically, biotech stocks are very, very binary, and they tend to be either really good or nothing at all. So it's tough to play the bios. But here's a way that you can do it that I think makes a better sense, because trying to pick one biotech out of an entire amount is difficult. There is a ETF though out there that I think that might help you in this. It's called the IBB, or the iShares Biotech, a Nasdaq Biotech stock. Now, here's the thing about it: it is in a cup and handle, and this could definitely break out. There is a there is a first stage base on it, and the pivot is 144.82. So if I were going to be in the BIOS, which I don't think I will be, because the relative strength is only 62. I typically like to see 80. This is a way you could play it. It's called the IBB, and it is an ETF that covers the this area. So it's kind of interesting. Let me look at the SB. Okay, so let's take a look at two more. We have SWK and Yeti. I kind of like Yeti, actually. They make some very cool stuff that is very popular with tailgaters and outdoor enthusiasts, and it's done very, very well. Well, Stanley Black & Decker is kind of a stay-at-home stock. It, of course, is probably the king of the appliance trade these days. It's looking pretty decent, actually. It's got a relative strength of 81. I like that. 177.98. It's up $3.59 today, but the volume is down. So the question is, where can you buy this? Well, there is a buy point on it. First stage cup. It's about 154.42. So would I buy this one? Well, I don't know if I would buy this one. Let's look at the checklist on it. It's a good checklist, 6 out of 9. That's worth looking at. Let's look at the fund ownership. We definitely have a lot of funds in it. A little bit slipped a little bit, but still quite good on this. Here's the issue with this, and I want to point this out. I would not buy this into earnings. Earnings are in 5 days. I think you want to hold. I think you want to wait on and to make an investment decision until after it goes through earnings. More than likely, if we look at this now, let's kind of look at the past here. More than likely, it will drop into earnings. So let's see if that. Let's look and see if that is a reasonable assumption. If we go back to the last earnings, it was down 40%, and it did fall. Okay, and let's go back to the first quarter. Well, the first quarter, the earnings were off as well, and it fell again. So here's the thing: it looks as if, based on the history of Black & Decker, I think that you have to be careful coming into earnings. I don't think you want to own this into earnings. I think if you want to buy this, you want to wait until after earnings to be in this stock. That just seems to be the way it trades. That's the way a lot of stocks trade. It's basically that whole thing. Buy in rumors, sell in news. So that's kind of the situation there. So let's see if I have a question from TikTok. Thank you very much for holding on. Thanks for the PayPal alert. Thank you. It was an excellent short. Okay. Yes, it was. Yes, it was. I agree. Thoughts on Ford above $8? I definitely have this on the watch list. I definitely have Ford on the watch list, and that's F. It's pulling above 8. It's right after a buy zone. So, this one might be a good one, actually. It's on the buy list, and it is extended. This is the buy zone in here, but it's such a cheap stock. The pivot on this one was 738. It's 819. Now, this does have an improving relative strength. As you can see, this is a line that's moving up. This is a very important line here, this blue line. And what this says basically is that this is its relative strength against the S&P 500. So this is actually improving against the S&P 500. That's something I like to see. The only issue here is we've got earnings in 6 days. I just don't want to buy this before earnings. But I do think it's on the watch list. It's definitely on the watch list. And, if it checks out, then we possibly go into it. The William O'Neill checklist on this only has 4 out of 9. So it's not a stellar checklist, but, it definitely people seem to be looking for this. It has 24% fund ownership, and the rest is retail. So very interesting stock. And currently, just show you how it comes out on the small portfolio that we maintain here at Dallas Trading Floor. So I'm going to show you where it exists on that watch list. Let's see if I can come back right here. All right, there we go. And we're right here on Ford. It is extended currently. It is extended. So it is definitely It's definitely out of the buy zone, but this is a very inexpensive stock. And I do think that you could probably pick up 100 shares of it. I don't think I would work. I don't think I would buy forward until we went through earnings, just to see kind of what the general direction of the stock is. So that's very important as well. Actually, with a stock like this, as it goes higher, that's where you want to buy it. So that's an important thing. All right, so let's look at Yeti to see if I can give you some good information on Yeti. YETI. Let's look at Yeti and see if there's anything there that is possibly buyable, and I think it is. So let's look. It's pulled back a little bit to the 50-day moving average. It's right between a consolidation zone on the technicals. It's off 80 cents today. Would I buy this? It's got a relative strength of 92. That's very good, by the way. It's got an excellent checklist, 8 out of 9, so that's looking good. How about the fund ownership? Well, that's going up too. So the question is, can we buy this thing? Well, right now it is actually buyable, not off a base, but off of the 50-day moving average. Now, the question is, what's going to happen? Is it going to bounce off that? I do think that if it pulls back to about 48 and then moves higher, you possibly could buy in that. But right now the trend is not our friend with Yeti. It's actually moving down. As you can see, this is the trend currently. I'm drawing a line here. That is the trend on Yeti. I think we will get a reversal and it'll move higher. Don't buy it until there is a reversal on this, and I think if you do, you might be in for a very good run on this. It does look pretty good, but don't buy it into first of all, don't buy it into earnings. It's 14 days to earnings. And also don't buy it on the downward trend. Wait until there's a trend reversal on it to buy it. But definitely watch the stock. So very, very good. So what about PayPal and Square? Well, I put out an trade alert on PayPal, and I did put it in the small portfolio. And, it had a very, very good pattern. But it's pulled back. It's pulled back a little bit. So ouch, that kind of hurt. I hope that it'll firm up again. It definitely is showing a very nice pattern. The question is, will it pull back? Well, right now there is a cup with handle base on this at 209, which is quite good. But it's at 204, so it's $5 below that. There's a lot of volume on that, so it seems to be some selling into earnings. So earnings are in 11 days. So what to do on this, where to enter. Let's take a look at how we bought it to see how we're doing on this. This went into the small portfolio. So let's take a look quickly. And you can see we have PayPal here. We bought it for $2.10 a share, and unfortunately it's $2.03, so we're off $25 on the profit and loss. So we're down a little bit on that. So hopefully, if it follows the general chart pattern, we will see it to go higher. But when you buy a stock, and this is very, very important, even if you have a very, very good chart pattern, the most important thing to do is to protect your position. And one of the ways that you do that is to put a stop loss in, and the stop loss you need to put in is about 7% below where you bought it. So put it in good till counsel and make sure it's a market stop loss, so that if there's a lot of volatility in the market, you will get stopped out. The reason that's important is because it's always important to keep your capital, and that's one of the ways you can do it. It's very frustrating sometimes, but if the market takes a move downward very quickly, it can be a lifesaver. So just FYI. Your thoughts on MAN and a sold out net and bought Tesla? Thanks. Well, thank you, Mr. Sid. Thank you for saying that. I reduced my. I'm still in NET on some I'm still in NET, but I did in my other positions, I did sell out the position. So I reduced my exposure to NET, and then I basically went, a little bit more into Tesla, because I do think that Tesla is going to move higher. in the next few weeks. So let's look at Square. I've taken a look at PayPal, but let's look at Square. It's also pulling back. It just seems like the financials can't get a break, can't catch a break today. So it is what it is, and it's pulled back to that 21-day. Now the question is, will it bounce off the 21-day exponential? That's this green line here. If it does, then I think we're okay. If not, we're going to our next stop is going to be the 50-day, and earnings are in 14 days. So. Boy, I wish that, we'll see if there's a reversal on Square. I think, it's still worth holding. So let's look at the criteria for it just to make sure. Our checklist is very good. 7 out of 9 on the technical indicators. The ownership is increasing. That's basically, folks, what makes a stock move is its fund ownership. The more funds that are in something, the better off you are when it comes to when it comes to the stock. So at increasing fund ownership, that's what moves the stock up. It's not retail investing, it's typically fund investing. So that's a very important that's a very important thing to look at, is the fund investments in the stock. So that just basically is that. Okay, so here we go with the election uncertainty in earnings season. Is it time to stay in cash? You know what, Dinesh? This is a very good, very, very good point that you make. And it is, I am in cash. I'm not, if you look at my small portfolio here, I am in cash more than I'd like to be. I did go into the Grayscale Bitcoin Trust, but if you notice, I'm almost a quarter in cash right now. I'll show you the chart. There we go. I'm almost a quarter in cash. So I definitely think being in a larger cash position right now is not a bad idea. It is not a bad idea. I have, I'm up slightly, but I'm definitely off on 2 of the buys that I made recently, Viva Systems and PayPal. So even though PayPal had a very good chart pattern, it's pulled back a little bit. So I think being in cash is not a bad idea. The reason I started with this just tiny position in Greystone Bitcoin Trust is for that reason. This is a hedge, and if this does well, then I will move higher in it. It's up about 2%, 3% today. And again, I don't have very much of this, but this kind of gives you an idea of how to hedge, and I think that cash is the best hedge. That is the best hedge typically out there. So not a bad idea. Let's see what the election is going to do, and see how that works. So very good point. Let's take a look at that with the election uncertainty. So I think it's really good, Dinesh, that you're doing that. TGXT. So let's look at TGXT. Beam is interesting. I don't know what's going on there, but I will definitely take a look at Beam. Okay, TG, is that right? TGXT? Yeah, TGTX, excuse me. That is the symbol, and there we go, TG Therapeutics. Let's take a look at the chart on that. So we have pulling back below the 21-day exponential. It is above the buy point. The buy point on a second stage cup base is 24.76. It's 27.43 right now. It's up 20 cents today. Volume is off though. So let's look at the checklist on this to see kind of the industry and sector. It's 45, so 74. So this is good. It's in the top third. It has a good checklist, 6 out of 9. That's my minimum for buying. And it does have increasing fund ownership. So everything looks good there. And it's got a 98 relative strength. So I definitely think this is a watch list. I would like to see this thing. It looks like the thing is bouncing. So we may have a potentially good opportunity on this one because it looks like it has reversed. And that is a very good way to buy something. See, this was the trend, basically, as it came down here. And then when it hit this blue bar here, that's a reversal. So not a bad idea to buy on the reversal. I mean, at 27.43, if you bought on the reversal, I would wait until this hit about the about this level here, about $31. So there's some potential gain in there on this reversal. I do think that you might be able to get about $4 out of this very quickly within possibly as little as 2 weeks. So that's a good one right there. That's a good play. That's a swing trade. And I definitely think there's some great potential on that. Let's look at Beam again. I want to look at this one because this one wasn't on my radar, so I appreciate you bringing it to my attention. Beam Therapeutics, and it's pulled up very, very nicely today. I don't quite know why that is the case, but I do like buying breakouts. I will be the first to admit that. And it's broken out from this, very nice consolidation base, the first stage consolidation base at 31. So at 35.50, it's a little bit extended, but it looks as if there's sort of a flagging pattern here, and this can be very, very bullish. So something must have happened. I don't quite know what's happened. We've got 29% fund ownership. That's excellent. The checklist is good. I think that this one, I missed the breakout on this one. Let's see what happens if it pulls back a little bit. With this relative strength, we've got something going on here. I think if this thing pulls back just a tad, I think this one could be a very good buy. So I'm going to look at this more, and I may put out a trade alert on this. I thank you for bringing it to my attention because this is a good chart, and buying breakouts is a good way to make money. It absolutely is. So let's look at some more people from TikTok. Thanks for the PayPal alert. It was an excellent chart. Okay, yes, it was. Is Amazon in a good entry point? Wow, that's a good question. Let's take a look at Amazon. AMZN. Let's see. There we go. Amazon is a little bit off. And I don't like the trend on this one, but it is a cup with handle, and this could, on the reversal, as you can see, it's moved down here. It just hit this consolidation, and then boom, it moved. Okay, see if I can give you a good. No, come on. There. All right, maybe there. No. All right. Well, it didn't work. But it has pulled below the 50-day moving average. I do like the fact that the 10-day has moved above and the 21-day exponential is right at the 40 days. So that is showing some strength. But I do think earning 7 days. I think you want to wait until the day of the earnings. You probably want to buy this after earnings, but it does look like it's setting up very nicely with a cup with handle. A base. If earnings are good, it probably will retreat a little bit. Then I think it'll go higher. Let's look at the checklist. It passes on all accounts. So this is very, very, very strong. Amazon on the technicals looks very strong. So the question is how to buy this thing. What's the strategy? The strategy for me, I don't think I would buy it into earnings. I think it'll pull back a little bit. I think after it pulls back, and I do think it will pull back on earnings, even if they're excellent, then I think you want to move into it. But I could be very wrong on this one because it has already pulled back quite a bit. So that it might be the time. But I think I want to wait until basically the day after earnings and to see kind of what happened, and if they were, and look and see what the overnights are there. If it does pull back after earnings, I think that would be a buying opportunity for Amazon. So you could do very well on that. So let's look at XOP. Oh, XOM, I'm sorry, ExxonMobil. ExxonMobil, unfortunately, this used to be one of the greatest stocks in the world. This is old Standard Oil Company, of course. Everybody knows that. But it's just this is not a buyable stock. If you look at the trend here, we have a downward sloping trend. You just have to you don't want to ever buy a stock that's downward sloping. This is on the daily chart, but let's look on the weekly and the monthly chart as well. So let's look at the weekly chart. This is not a chart that you want to buy. It's got a relative strength of 5. Let's look at the monthly. It's not good either. So this is just something you want to stay away from ExxonMobil. I don't think this is not going to end well. It's only got a 3 out of 9 checklist, and the ownership is really it's decreasing. Now, here's the thing about this. This still has a tremendous dividend. So if you were looking for the dividend play, this might still be good. This is going to become kind of like a tobacco stock, I'm afraid, and it's going to be very difficult to be in a stock like this in the future, because I just think that oil is right now in a glut, so not an easy place to be. On that note, let's look at BA. That's Boeing. BA is, this is the largest company, exporting company in the world, in the United States. But unfortunately, if you look at this chart, it's just horrible, I'm afraid. Let's look at the weekly chart here. But we have a downward trending chart. We just don't, this is actually, to believe it or not, this is potentially a short, actually. I know this is hard to believe. There's earnings in 6 days. That could catalyze a move lower, but it looks like it struggled. It moved up, and then it failed at the 50-day line, and it's pulled back up. This could be shorted. I mean, this is actually, believe it or not, a short. I don't know exactly when that's going to be, but it's on my list to short this stock, because this, unfortunately, is just not, the orders aren't just going to be on there because of the COVID thing. There's too many planes chasing too few flyers right now, and so it's just not a good place to be. But I think BA is a potential short. I'm going to be working over the weekend probably on the analysis of that. We may be into a situation where it's a good short. All right, so Tesla and PayPal. PayPal is not performing as I was hoping. I mean, not me neither. I'm still bullish. I am still bullish on PayPal. I know that's hard to believe, but I still am bullish on PayPal. It was setting up very, very nicely, and all of a sudden, it just isn't doing the right thing. I still like the stock, and I'm currently in it with one full position in the small portfolio. As you can see, it does have some very good fundamentals. So let's take a look at the chart. Is that a reason to buy it? No, but we do, it is pulled back to the 21-day line. There is a relative strength of 94. I think this is excellent. The buy point on it is 212. So the question is what's going to happen on this? I do think we're going to see a reversal on this, potentially after earnings. That's what it's showing, but can you be sure? Never. But it's got a 100% checklist, and so this is very strong. This is why I continue to be bullish on the stock, even though we had a real pullback here, and it was a strong pullback. So I do think that I am still in PayPal, and I do like the chart, even though today it was just not that great. Tesla seems, as we said before, it is basically still kind of holding. Kind of where it's at. It's pulling back today, but it seems to be in a trading range, so I'm not too concerned about it. They had excellent earnings, basically yesterday. So I think a lot of people. This is typical. This is a typical chart pattern. I just want to bring this out. Is typically this is what will happen. There'll be excitement going into earnings, and this is one of the reasons why you don't typically want to hold through earnings unless you're hedged in a position. I happen to be hedged in this position in my other portfolios. The small portfolio, no, but the other portfolios, yes. As it comes into earnings, typically, even if the earnings are great, and they were excellent at 106, it still pulls back. So this happens about 80% of the time. This is one of the reasons why, if you're trading a stock, it's not necessarily a great idea to hold it through earnings. Sometimes I do that, though. Sometimes I don't eat my own dog food. That's for sure. But that's the reason. Even if it's looking really good. Thoughts on DOYU? That's interesting. I don't know this stock. Let's look at it. DOYU. Let's see if we've got anything there. Oh, not recognized. Huh. Okay. Well. DOYU International, Chinese-based company that provides live streaming. Interesting. Okay, well, it looks like we have some pretty strong relative strength. So let's look to see if this is a viable stock. Live streaming is really good, and we definitely have an IPO base. We've come up here, and then we're in this consolidation. Let's see if we can get anything on this. Wow, this is really good. 8 out of 9. That's very, very good. Also, we have increasing fund ownership, and the checklist is at 88%. That's really good, actually. So I was not, yeah, Doyu, International Holdings, DOYU. So this is, this is potentially, yeah, this is definitely a watch list. Right today, it looks as if it pulled back to the 21-day exponential. Let's look at the daily chart to see if there's any entry point that we can find on this. It pulled below the 21-day exponential. If this thing reverses, I think it may go above 15. That seems to be where the 40-day is. There's several things that I don't like about this chart. The fact that it's pulled below the 50-day, I don't like that, but it seems to be in this consolidation range, so I can't count this one out. This is a watch list stock. This is a watch list stock, and this definitely could move much higher. So I really appreciate that. That's interesting, Robert. I thank you very, very much for that. That one wasn't on my radar either, so I picked up two of here, Beam and DOYU today for my watch list. That's very, very good. All right, Snap. After earnings, do you think PayPal will perform the same after earnings? So let's look at Snap. SNAP. Stocks tend to give up some of their price after earnings. It's just the way it works. There we go. Yeah, look at that. Wowie kazowie. Okay, I think we might. Yeah, there is a potential. Now, usually, 8 times out of 9, a stock will move back after earnings. This is gapped up, so this is tremendous. They've got, look at that earnings per share. Wow, that's up 125. Yeah, this is super. This is super. This may actually be, based on this chart, this might be you might want to go into this one. Let's take a look. Wow, look at that. Look at that. Okay, so yeah, okay, so let's look at the trend. Let's see if we can come up with a trend. Yeah, we definitely have a trend. Yeah, this is probably going to pull back and a little bit, and it's probably going to move higher. That's what I'm looking at this trend at. 97 on the relative strength. Wow, this is looking very good. The checklist is excellent. You know what? This might be this might be a breakout alert. Wow. Very, very nice call. Look at that, earnings really nicely up. Now, this is very unusual. Usually, it doesn't work this way. Usually, it doesn't work this way. Usually, what will happen is even on good earnings, it will pull back. But this one definitely has pulled up. So, interesting. It looks like there may be a rotation then out of some of the other stocks that are in this space. Possibly on Facebook. I have to look at the Facebook trade. So let me take a quick look at what Facebook is doing on their chart to see if there's been any rotation out of Facebook into Snap. Yeah, okay, so Facebook isn't, it's still doing very, very well, but it doesn't have the chart is a little bit different. So, I wonder if there's some movement out of, it's basically 7 days. So I wonder if we have movement out of Facebook into Snap. Snap looks very, very, very good. So I will definitely have to put Snap on the watch list and to see if we can get some buy points on that one. Just trying to put this together. The volume is so low. We might see a big drop in the market before elections. Very good question. I think that everybody is sort of waiting with bated breath to see what's going to happen with the debates tonight and the potential in the election. I do agree with you. This is why this is a tough market to trade. I definitely think recommend moving into cash until we find some direction. We still are in a confirmed uptrend. That is definitely true. But right now, I think you want to possibly, first of all, you don't want to be on margin at all in this environment. You want to be about a fourth in cash, about a quarter in cash, and that is reflected on the small portfolio. By the way, if you're interested in taking a look at the small portfolio, you can sign up for the small portfolio. It's available at www.Dallas Trading Floor, and I'll just show you how the site looks when you go over to Dove's Trading Floor. There, we sign up for the free action trade alerts, first and last name, and email, and hit that subscribe button. And also, we have the link. You could get the link to the small portfolio, first and last name, email. Just hit the submit, and of course, it's all free to everybody. Also, if you want to learn how the system that I use to trade, it's many professionals use this. It's called the Can Slim method. On my website, there's a Learn to Trade bookshelf, and we have How to Make Money in Stocks, The Winning System, Good Times or Bad, and the companion volume with Matthew Galgani. So also a very good way to learn kind of the Can Slim method of trading. And of course, you don't have to buy it through the website, obviously. It's available at any bookstore, and many used books are out there too, but William O'Neill is the author of that, so that's something that you might want to look at. Okay, so let's see. Is Slack, Tekken, is work buyable? Let's see if it is. It's hard sometimes to get the right entry point, but let's see if we can find one for work. I'm just going to pull it right up here, and there we go. Is it buyable? Wow, it doesn't. All right, so let's kind of look at the chart to see if we have any place to buy it. Well, there's no discernible chart pattern, and it seems like everything has moved. It seems like everything has bounced off the 200-day moving average. I just don't. This is this Slack is going to be a tough one to buy at this point. I want to see a reversal off the 200-day before I buy it. The relative strength is also too low. Can you buy it at this level? Ooh, I don't know. Let's see if we have a reversal on this before looking to buy it. Unfortunately, the trend that I'm seeing is this trend going south. Unfortunately, this is the trend that I am kind of seeing on this. Let's see if I can get that in there. There we go. It's a downward trend right now. It's pulled up, but I think we're going to pull back on this. I don't think there's a buy point on it right now, but it's got a 6 out of 9. That's my minimum, so that's good. We do have some very, very good funds in here. Fidelity Contra Fund is in there, so I wouldn't count this one out, but would I buy it at this point? Gosh, I think I would wait for a reversal. If I was going to buy this, I would buy it on a reversal, and it might reverse on the 200-day moving average. There is a chance of it. But currently, I would not buy this until there was a reversal. I want to see a green up arrow on the weekly. Let's see if on the daily chart, see if there's anything to buy there. Let's look back at the chart. This is the daily chart to see if there's just any entry point that we can come up with. This is not looking good. Relative strength, it is going in the wrong direction. Here's the thing. This is one of the reasons I use this relative strength so much, is that when I'm looking to buy something, I want to see this line move up. So I would buy here, but I wouldn't buy here. So I have to say, based on the trend, I would not buy it at this level, but I would wait. If this relative strength then changes direction to the upside, then I think we could make a buy. But right now we can't, because it's going to be giving back a little bit more. So this is a watch list stock. It's a good stock. Snap is a good stock, but I just don't think it is. There's just not really an entry point there. So I'm afraid you're going to have to wait on that. You're going to have to wait on that, and it kind of stinks, actually. All right. Yesterday, stopped out of Cloudflare, Workhorse, Etsy, and Vive. Wow, I agree with you, man. It was tough. I'm still in Vive, but I'm down on it. I have to admit, I am down a little bit on that. Let's go back to the small portfolio to kind of show you that. I am definitely down on that. On that. So let's see if I can come back to the portfolio here. Yeah, I am down on PayPal and Viva Systems. Still up on Cloudflare because I was able to buy it quite right at 45. But this is just a tough market to trade. The Grayscale Bitcoin Trust is up. I bought that this morning, very small position, and that's just a toe in the water position. It's not even really a real position. But I hear you on this. But here's the thing. It's very frustrating getting stopped out, but it's better than getting ripped out and ripped down 20 or 30%. So, that's just that's the way to go. Thank you, Arnold, very, very much. I appreciate you looking on Periscope And by the way, if you're having trouble on any of the other platforms, Periscope is a great place to go because it seems to be technically superior to some of the other platforms that I'm dealing with. But Periscope is an excellent place to go. What is the general overall market direction? That's a good question, because I think what we've got to do is look to see what the market trend is. I mean, are we, how are we trending? What's going on? How many distribution days do we have out there? And this is the chart of today's market. And it's a tough market to trade right now. It just seems to be kind of going sideways a little bit. But let's take a look at the chart. That's gonna tell us that, basically, and that is, we have it pulling back, but it's pulling back. It is showing a little bit of strength today, but the market direction is still in a confirmed uptrend. But here's the thing: as you can see, what happens is that it's pulling back to this 50-day moving average, and then it looks like it's bouncing off of that. So we are in an uptrend, but we're not in a powerful uptrend. We're in a weak uptrend. So when you're in a weak uptrend, you want to set your stop losses actually tighter than you normally do. So you want to set your stop losses at 7, or possibly take off a little bit of the risk into the election and possibly go into cash and see how it's going to trade through the election, because it's just difficult. This is an interesting stock, SE. It's a Singapore-based company, and it has had some very, very good action as of late. CA Limited. So let's look at it. This is a stock that I don't think you can count this out at 161. Now it's pulled back today. It's pulled back below the 21-day exponential, but it seems to it just seems to kind of be bumping up this 21-day moving average. So the question is it buyable at this point? Well, let's look at the checklist. 7 out of 9, so that's very good. And the fund ownership is increasing, so that's giving a lot of a lot of the good housekeeping seal approval. It's got a relative strength of 99. That's very good. Even though the chart is down a little bit today on this, this wouldn't be the day to buy it. If this thing reversed, it might be ready to go. So I would watch this as if I was looking for an entry point in this one. I do think you could buy it off of the 21-day moving average. And if it moves higher than 161, it's 161.30, 63 right now, I think you could buy this. And this is quite a strong this is quite a strong stock. So very good chart, and definitely buyable. But I would wait for the reversal on it to see to buy it. But thank you very much, Matt. Appreciate that call. What does it mean when you say buy a full position? Having issues on how many shares to buy per second. That is a great question. Here's what a full position is. Well, have you ever noticed? There are 8 full positions in a typical portfolio, and here's how it works. If you have a link to my smaller portfolio, you'll see how I trade this. But a full position is if you take the entire value of the portfolio and you divide it by 8. So in this case, on the small portfolio, the value right at this moment is $6,270.83. So if you divide that by 8, that's going to give you 1 full position. And when you enter a stock, you should enter either with a half position or a full position. Right now, it's probably best to enter with a half position. So basically, this is going to give you how much to buy when you get ready to buy it. So let's put it in context, and I'm just gonna go in here to our watch list, and I have this in the small portfolio. And if you'll notice, I have several things that I've put on the watch list. I've put on this GBTC. This is an ETF, and this is going to give the proposed numbers of shares that I will buy for a full position. 55 in this case would be approximately, and it's not updating this as well as I'd like it to, but this is going to be a full position. If I'm in PayPal, it's only going to be 4, or 30 if it's in Lumber Liquidators, or in 2 if it's in Viva Systems. And basically what this tells you is that this is about the size of the full position. currently, based on this portfolio, if you were to take the full amount of the full value at this moment of the portfolio and divide it by 8, it would give you $783.65. So that's how much you want to buy as a full position. If you are interested in finding out how to position sizing, and this is a very, very important thing, and this can be a very, very good thing to do, I would recommend getting this book. And it is available on my website, but you don't have to buy it on my website. You can buy it anywhere, and it's in many cases this is available at your local library. And what this book is on the Learn to Trade bookshelf is it's called How to Make Money in Stocks: A Winning System, Good Times or Bad, by William O'Neill. Okay, and he is one of the premier technical traders in the world. And most of the top many of the top traders in the world use his system. It's called the CanSlim system. Also, if you do buy the orange cover book, it's a good idea to possibly look at this one, How to Make Money in Stocks, Getting Started. And this kind of gives you a checklist, sort of like the Cliff Notes for it. I recommend both of these to get an idea of position sizing. So this is a very important concept, and you want to go into you never want to go in with more than about a full position. And then as what you do is you put in a full position. This will give you the correct sizing. And then as the stocks perform or unperform, you basically sell them out and you move into the better positions. You move into the more productive stocks. So this position trading can be very, very good way to manage your risk, but also to concentrate, because you need to concentrate your buys into basically 3 to 5 stocks to make the most money off your portfolio. So when you come in with a position and then you gradually winnow them out, you're going to sell your losers or your underperformers, and then you're going to take that money and push that into the stocks that are doing very well. But the way you do this is with the position trading. And so that's basically in a nutshell. And that's a very, very good question, because typically when people start in the stock market, they don't realize that, hey, I can buy a very good stock. I might only be able to buy 1 or 2 or 3 shares of it, but I can buy the very best stocks, and I don't have to necessarily have 100 shares. It's a fallacy to think that lower price stocks are going to make more return. They typically don't, because it's like inventory in a store. You want to be buying the very best, and typically the higher priced stocks typically have the better growth potential. So that's the reason why you want to do the position trading. So you might have 100 shares in one thing, and you might have, for instance, might have 100 shares in Tesla. You might have 2 shares in Tesla, or maybe even 1 share in Tesla, and you might have 100 or 200 or 300 in Ford. And but they essentially take the same amount of capital. So that's what position trading is, and I really appreciate that question. That's a very, very good question. And by the way, if you want to learn more, just go to my website, www.dallastradingfloor, and also we have the action trade alerts that you can see on that as well. So I really appreciate that question. That's really good. Okay. Let's see. Party City. Interesting. Party City. It's time to load some. Okay. Well, let's look at Party City. I can't remember what PCTY, I think it is. That's the symbol on it. Let's see. PCTY. I've definitely. Yeah. Party. Nope. Paylocity. I'm sorry. That's Paylocity. Is that Paylocity or Party City? Which one was that? Party City. Okay, I'll go get that in just a second. Jim, what is this Easter egg that you're speaking of? You mentioned it on Beam. Okay, what is the Easter egg? So let's go back to Beam. I just kind of want to show you what that is. You're like, what Easter egg? So let's go back to Beam. This isn't on all charts, by the way. I use MarketSmith by IBD, and it has some very, very nice features on that. So we're going to go back, take a look at the chart for Beam to kind of give you an idea of what this is. This is this little kind of egg here. As you can see, it's a little Easter egg. And this typically appears when we've had the highest volume since the last pivot. Okay, so that's actually very important. When you see one of those Easter eggs, that's saying take a look at me. I'm making some volume. I'm making some new highs, and this is the breakout here. So this is what I'm talking about with the Easter egg, and it's a very helpful thing. And basically, what it is it's the largest volume since the last base. And according to this, the last base was right here, and that was the consolidation base at $31. So this is broken out from this base. That's what this means. That's what this means. So we definitely have a breakout. So I like looking for these little Easter eggs because it shows a lot of potential. If we look for those Easter eggs, then sometimes we can identify stocks that are going higher, because a stock that's broken out, it typically will readjust, but then a lot of times will go higher. That was the case with Tesla. When I started trading Tesla basically seriously back in December of last year, there was an Easter egg before, and then I looked at that Easter egg and I go, wow, this is great. There's a breakout at 361. Of course, that's the unsplit amount. So these are very, very helpful, and I try to bring them up as much as I can. Do you recommend buying Tesla? Well, I actually think that Tesla is going to be stronger into the year end. It's pulled back a little bit, but it had some great numbers. So the question is, what is it going to do? Who can tell? But I do think it's going to benefit from either party getting into office. If Biden gets in, I do think that a lot of people will, there'll be a renewed interest in renewables and in potentially tax credits, which could help them. And I think if Bush retains, Freudian slip, if Trump retains the presidency, then I think it also could be good because of the domestic manufacturing policy. So I think it's good for both. I think it's good both ways, and that's one of the reasons I like it so much. Some of the other shares, like United Healthcare and stars like that, they're going to be benefited more under a Biden administration than they are under a Trump administration. So I'd like to hedge my bets, but I like the ones like Tesla, which I think can go up either way. And so that's one of the reasons I'm very, very bullish on Tesla. Well, I have come to the end of an hour, and I thank you very, very much for taking a look here. And I will see you tomorrow. If you would like to get on the list for the free action trade alerts, super easy to do. All you have to do is go over to the website, which is www.Dallas Trading Floor, and sign up. And it's super easy to do. And if you're on the trade alerts, we will send them out. And this is how I'm trading things as they go. So thank you so very much for coming by today and taking a look. I will see you tomorrow at 2:30 Central. And so happy trading.